Welcome to Quick Bite, your fast and friendly Florida insurance update.
Hello. This is Roshonda with the Isom Insurance Group right here in the Sunshine State of Florida. We have a new Quick Bite episode, your fast and informative insurance industry update. Today is Monday, October 27th, 2025. We're diving into a topic that almost no one wants to think about: death. But it's one of the most important insurance conversations you can have. When a homeowner passes away, what happens to their insurance policy? Does coverage end that day? Does the house suddenly go unprotected? We'll unpack an article from insurance educator Christopher J. Boggs, Death and Insurance, Not Taxes, Part 1, and focus on what your homeowner's policy actually does after the insurer dies and where the coverage gaps can sneak in. Let's get into it. Boggs starts with a real experience in this article. His wife's parents passed away just 13 days apart. They had a home, cars, personal property, and some land. Now think about this for a second. Even though both insureds were gone, those risks didn't die with them. The house could still burn down. Someone could still fall on the front steps and file a liability claim. A storm could knock down a tree onto a neighbor's fence. Until ownership transfers through probate or a trust, those assets and their liabilities still exist. Here's a stat. According to AARP, about 2.3 million estates go through probate every year in the US, and the average timeline is 6 to 9 months. That's a long time for a property to sit at risk if insurance isn't handled properly. The good news, the standard ISO homeowners form does anticipate this situation. In the fine print, Section 1 and Section 2 conditions, paragraph G, there's a clause that kicks in after death. When the named insured or their resident spouse dies, the policy doesn't end automatically. Instead, it extends coverage to two groups: the legal representative, that's the executor or personal representative appointed by the court; any residents or caretakers temporarily in charge of the property. In plain English, the policy recognizes that someone still needs to care for the home and keeps basic coverage in place, at least for a while. Once a legal representative is formally appointed, they step into the deceased's shoes for certain purposes. They're covered for property damage, the home and personal property now under their care. They're also covered for premise liability if someone gets hurt on the property. But that's where it stops. They don't get coverage for personal liability off premises, for business activities, or for vehicles. Boggs makes a critical point. Appointment isn't instant. In many Florida counties, it takes 2 to 4 weeks to get court approval. During that time, there's a gray area. The house still exists, the policy is in the deceased name, but no one is officially authorized to act on it. So what happens in that gap? That's where the next group, residents and caretakers, comes in. Until a legal rep is appointed, coverage extends to two types of people: resident insureds, family members who already live in the home, people with proper temporary custody, like a trusted friend or relative checking on the house. Examples: let's say a widow passes away, but her adult daughter still lives in the house. The daughter is still an insured, so if a pipe bursts or a guest slips, coverage applies. But if the home is vacant and a neighbor pops in to feed the cat, that neighbor has proper temporary custody and is only covered for property losses, not liability. Think of it this way: the policy protects the place, not the person, until someone new legally owns it. Here's the danger zone: the coverage gap between death and probate. If no one lives in the home, it becomes vacant, and vacancy creates risks. According to the National Fire Protection Association, vacant homes have double the fire loss rate of occupied ones. Picture this: the owner passes away in June, probate doesn't begin until August, and a storm in July damages the roof. The carrier might say, "Who owns this home right now?" And if no insured is clearly defined, you could see claim delays or denials. So for families, notify the carrier as soon as possible. Confirm someone is checking on the property regularly. Keep utilities on and the policy active until home transfers. As Boggs notes, the ISO form does a solid job bridging the short term, but it relies on communication and good record keeping. So, how do you protect your family from insurance limbo after a loss? Plan ahead. If you have a trust, list how insurance should transfer after death. For executors, call the insurance carrier immediately after appointment. Don't wait for probate paperwork to catch up. For agents, offer to review estate properties proactively, especially if a policyholder is elderly or in assisted living. And finally, remember, the death of someone doesn't cancel the risk. It just changes who's responsible for managing it. If you found this quick bite episode helpful, please like this video, share with friends, and drop a comment below with any insurance questions you'll like for me to cover in a future episode. And don't forget, a new quick bite drops Monday through Friday at 2 p.m. Eastern. This video is for educational purposes only. It should not be taken as legal, tax, or specific insurance advice. Please consult with a licensed insurance professional about your unique situation. This is Roshonda with the Isom Insurance Group here in sunny Florida. Thank you for watching, and I'll see you next time. Stay safe out there. Bye.
Thank you for watching. Visit us at isominsurancegroup.com.